Okay, so these narrow range days could be short-lived and perhaps we could see more upsides. That's what the technicals are suggesting. But what about the fundamentals? We have Mayuresh Joshi, who's also with us, to talk about how he has looked into the markets today and what he's expecting ahead of the budget. Mayuresh, this is the time when most people take trades on the pre-budget expectations on individual stocks. What are the 2 or 3 stocks that you would be bullish on ahead of the budget, and which are the ones that you would be bearish on?
Afternoon, Sonia. Clearly, I think the markets are expecting no great shakes to come out from the budget, so the expectations are very low-key before you're entering the budget. And again, I think it's the typical areas that the government thrust would be on: how rural spending pans out, what happens with infrastructure, which sectors are given infrastructure status, probable hikes on the service tax, probable hikes in excise duty. So I think the market's trying to encapsulate all this. So clearly, from a sectoral perspective, what we're probably liking is something like cement, stroke infrastructure as a space. Our entire take is with the government focus on infrastructure, stroke housing, expected to gather steam. And again, I think input cost staying benign. The realization in terms of top line growth, volume growth and demand revival are key themes which should probably happen over the next 2 to 3 quarters. Having said that, probably I think large cap IT is something that we'll be also liking at this juncture. Yes, I think there are a few jitters in how the US economy is shaking up and how the discretionary spends there might happen. But going by the historical trends and what's happened in the quarter gone by, we're clearly seeing client mining activity picking up. A few of the companies like HCL Tech have shown transformational deal wins in excess of $1 billion in terms of TCV. Client mining activity along with utilization levels have picked up for companies like Infosys. So large cap IT is something that we'll continue to prefer at this point of time. And clearly I think specific auto names, though I think there is every chance that there might be some duty changes happening, but clearly I think auto stocks in expectation of demand revival with pay commissions coming through, two-wheelers, specific two-wheelers and specific four-wheelers are looking quite decently poised at this point of time.
Okay, we'll continue our discussion on what to expect ahead of the budget. But before that, let's take a short break. Since it's Monday, to spice up our Mondays, we have our Monday special Mid-Cap Mania on the other side with Nigel D'Souza. And the stock on his radar today is a company whose cash is 1.5 times their market cap. Nigel will give us all the details. Stay tuned.
We're thinking that the rally that we're seeing is really a short covering rally. I mean, a lot of the stocks moving today are probably not stocks we would naturally go and buy. So the quality of the rise is not inspiring us at the moment, to be honest. You've got to think about the longer term direction of markets rather than thinking about the very short term. So it's not something that we're participating in at the moment. I think this time around for foreign investors, given the Modi Make in India, the Startup India, everything India, that unless we deliver on some structural reforms and kickstart this economy, and I think the Make in India will just become a phrase that we can use, but it's not really doing anything in terms of moving the economy and getting things kick-started on the ground. And I think that's where we are. So it's an important budget from that perspective, without going into any of the details of what the finance minister can and cannot do. But obviously, Lasse, you would know this more, but unless the banking sector's fixed, and these are a lot of fixing, a lot of things just don't happen.
Welcome back to the show. Markets are still stable, so holding with a gain of almost about 0.3% at this point. Not too much movement. The cash market volumes have improved just a tad bit, but still less than 10,000 crores. And in terms of individual stocks, FACT is one of the stocks of the day because now it's up almost about 15.5%, fact that is, at the highest point of trade, as you can see. Volumes are not very high, but yes, price action is significant. BF Utilities and BEML are a couple of other stocks that are zooming in trade. But it's time now for our Monday special Mid-Cap Mania. As always, we get Nigel to talk about some very interesting companies that he's discovered for us. And the stock on his radar today is a company whose cash is 1.5 times their market cap. What are they doing with so much cash on their books? Nigel will tell us. Take it away.
That's right, Sonia. In fact, they're sitting on a big cash pile. And if you take a look at it, in the last 1 year, they've had various moves. At one point of time, it was high. In the middle of last year, it had a move of close to around 30%. So you just take a look at it from June 2015, the stock is high with a gain of around 40%. But you take a look at it from during that period itself, it's currently down close to around 35% approximately. Now, the promoter holding at around 75%, that is a bit of a positive, and the promoter has primed up to around 75%. But the point that you made, in fact, the market capitalization currently is at around 240 crores, and the cash balance is nearly around 370 crores. So when I was going through various stocks, I was trying to identify some of these stocks who are sitting on big cash balances, because currently the market is looking at valuations and the likes. But a company which has more amount of cash definitely it calls for attention. So that was another factor. But you take a look at it in the last 1 week, a couple of stocks moved very well. One was D-Link and the other one was SmartLink, and both of them have some kind of connection with the Make in India push. So I was just going through their website, that's SmartLink's website, and in fact they have stated that they're encouraged by the local manufacturing which is taken up in the IT space. They're going to be very happy about it. And also they've said that they've launched a wireless router at its manufacturing plant in Goa. So you pull up just if you can get a snapshot of their website as well. This is what they have mentioned. They are looking at the Make in India push very, very closely. So that's in fact what's put up on their website itself. The other factors that come into play, they sold their passive business to Schneider in April 2014. I just joined CNBC TV in that time, and in fact it was very, very big news. I distinctly remember that. And the non-compete period ends in April 2015 because the non-compete agreement was for nearly around 5 years. So there is very speculation that maybe they'll get into this business. I reached out to the management and they in fact didn't give any sort of indication on that front. Currently they're functioning at very low capacity utilization. The management had told me this, and they said that their assembly line can enable them to produce various electronics. So that's another point that you need to look at. And they're a regular dividend paying company, but they're paying only around 2 rupees odd. The market has been waiting right from 2011 odd that maybe they'll give that one big dividend payment. Finally, if you just take a look at the financials as well, just another point, I think on their website they had indicated that they had signed Sonakshi Sinha as well, and this was done recently. But I reached out to the management, any kind of reasoning on that front, they didn't give any kind of reason, but that was a recent signing. So maybe they're coming out with new products as well. But the financials, absolutely not great at all. For the 9 months, if you compare it with last year, even if you compare it on a 9 months basis, it's not looking too good. Yes, they're sitting on a big cash balance, but the market is waiting for some kind of clarity in terms of what they're going to do, going to do with that, whether there'll be a big dividend, but that till now hasn't come about. Back to you.
All right, Nigel, thanks a lot for that. So that's SmartLink. A couple of stocks on your radar. BF Utilities, that's the price volume breakout on that stock. So that's up about 13% at this point in time. A couple of other stocks where we have seen, in fact, even BF Investments, the same group company with investments in some of these stocks. So BF Investments should also come up for you, and that has also seen same surge as BF Utilities. Ashwini, you pointed this out. So how much higher for BF Utilities from here on?
See, even Bharat Forge is doing well. So something is happening here. Obviously, the stock has come down from 720 down to 420, consolidated a bit. Today is the first day of the breakout. If you participate, I think easily we could see 540 in the days to come. So this is a mid-cap stock which is looking good for further rally.
Okay. Mayuresh, we were just discussing how some of these pharmaceutical stocks have come back into favor, and Sun Pharma is one of them. It's back closer to 900 rupees now. From this space, anything that you would recommend buying into?
Oh yes, Sonia, clearly Sun Pharma has been one of our preferred picks because most of the concerns related to balance sheet issues of Ranbaxy, the Halol plant, the remedial issues, the network integration costs are largely in the price. So again, Sun Pharma remains one of our preferred picks in the top tier pharma names. But clearly, even after the results, stocks like Cipla, for example, they've got a huge potential in terms of their portfolio outlook. The inhaler size itself is close to $3 billion odd. You're looking at a UK market size if that launch happens over the next next few quarters in excess of $450 million. You've got a very strong NDA pipeline. You're looking at a very strong domestic business. They're getting into new therapies. So that is clearly going to aid their margins going forward. Dr. Reddy's, again, I think we discussed this a few days back, and our own take is with the buyback, I think it is going to be EPS accretive from an FY17 perspective. Strong pipeline again, and most of the concerns related to their plants in Srikakulam are probably addressed. So in my opinion, again, I think the price damage that we've probably seen in terms of how the movement of the stock has been is largely factoring in a lot of negatives in terms of how the EPS hit might happen over the next few quarters. Again, I think the calibrated sales that we saw in Latin America, specifically Venezuela, and again what happened with Russian devaluation, considering the Russian sales along with the PSAI business, that's again expected to probably stabilize over the next few quarters. And again, the US business and India business are on a very strong footing. So Dr. Reddy's is something that we'll continue to like as well.
Okay, by the way, the stock of the moment right now is TCS. In the morning, it was the second biggest contributor to the market's gain. It's now the second biggest contributor on the way down. It's been that kind of a day. TCS is intraday chart, and you know, Sonia, that's my worry. In a low volume trade scenario, especially in an expiry week, you don't know, when all it requires is the impact cost has become so high. All it requires is a move like this on TCS, a move like this on Reliance, a move like this on HDFC, and you will see the intraday moves changing. You know, I mean, there's nothing in TCS which should suggest that there should be a 3% intraday slip. There's no news that we know. All of a sudden you have seen this kind of slip, again not backed by volumes. That's the problem for this market right now, and that's why breakouts are failing, because at every higher level, once the market is approaching that 70 to 50 resistance zone, there's some stock or the other where you're seeing this kind of intraday selling, and the market is back to 70 to 30 thereabouts.
Oh yes, for sure. Suddenly in a span of what, about 5 minutes, the stock has come off quite a bit. On the flip side, HUL is just powering ahead. HUL is now at the highest point of trade. It's almost a 5% rally that you're seeing in HUL. Look at the way that chart has been moving just from strength to strength. But if you pull up a 6 or 8 month chart of HUL, you'll notice that this 865 level is a big roadblock for HUL. It comes to this level, faces resistance, and then sells off from there. That's the 12-month chart, but if you look at 6 months, it sort of faced a roadblock at that 865 zone. Ashwini, come in on the chart of HUL. I mean, we've spoken about it several times, but at this level of 865, do you once again expect resistance to kick in?
Yes, this 865, 870 is a resistance, and in case the market does not plan to continue its pullback, then probably out here we should at least consolidate, if not come down. So 865, 870 for people who've been in since 800, that's a good target to have. But overall, compared to the rest of the market, it's a fairly strong stock, trading above its 200-day moving average now. So on all declines, this is something that people should look to buy.
Okay, the other stock that's been interesting, of course, is Maruti. Sudarshan, 35.20 now on Maruti. Is the correction good enough for you to buy, considering it was earlier a strong stock, or would you still maintain your view that this could be one of the shorts of the year?
In the short of the year, we are now looking at 3400. We've touched it. That's the target. So as far as the short trade is now over, Maruti is now finding some support, just as the Nifty is. I think we'll have to see what the support eventually turns into, but it's no longer a short.
Okay, Maruti is no longer a short. Well, the market is still very, very quiet. It's such a sleepy day of trade today, just ambling around that 70 to 100 level, but gives us some good time to give you some market opinion and tell you what the market is expecting from the upcoming union budget. Sanjeev Prasad of Kotak Institutional Equities says that the market will react positively if the government keeps its fiscal discipline. Listen in, we'll take a short break and be back.
If the government, keeps the fiscal discipline and targets 3.5% GDP, which is the target for March 17 year, so I think the market will take it positively. The RBI will look at it more favorably, given the fact that the government is maintaining a sufficient amount of fiscal discipline. There is a lot of expectation that eventually the government will be able to simplify the taxation systems in India, both direct and indirect. As of now, indirect taxation system is stuck because of no progress on the GST constitutional amendment bill. But on the direct side, the government can actually start the process of simplifying the direct taxation regime as it has promised in the last budget. Indian valuation is still on the expensive side compared to many other emerging markets which have corrected significantly over the last 1 to 1.5 years. Indian valuation is still holding up on a higher side. So So I guess you are seeing some amount of rotation out of India into other emerging markets at this point in time, and that's one of the reasons why India has actually been a significant underperformer compared to some of the other emerging markets over the last 1 to 3 months.
Okay, we'll take a break on this on that note, but we are building to budget in our closing bell money control question of the day, and today is on ITC. That's normally the weakest stock heading into budget. No different this time. It's down about 2%. Will you use this weakness to buy? Log on to moneycontrol.com and post your responses, and we'll read out the most interesting ones post 3:30.
Renault Passion for Life presents Headlines of the Day. Brought to you by Renault Passion for Life.
Welcome back. Well, it's been that kind of a day. The cash market volume still not 10,000 crore. It's been a mid-cap specific day. So a couple of more stocks. ISMO or IZMO, that's a stock which has seen a bit of an intraday surge. Look at that, big surge in fact, and decent volumes. It's not that it's not backed by volumes, 8.5% higher. Among largest mid-caps, of course, it's IDBI Bank and Crompton Greaves, beaten down stocks, as Sonia pointed out earlier, where you have seen some bit of buying. We have a corporate now, Pirojsha Godrej, MD and CEO of Godrej Properties, now joining us from the sidelines of the Kotak conference. Appreciate your views and your time. So that's Godrej Properties, one of the few outperforming stocks in the real estate basket. But let's talk about the overall market. Volumes have been so low today. So let's try to get some sense of what's been the feedback from dealers. Mangalam Malu is here with Trader Talk. Mangalam?
That's right, Anuj. Volumes are rather low in today's trading session. So that's what the dealers are saying as well, that the fact that cash volumes are low, they expect not much institutional activity itself as far as the institutions are concerned, irrespective of what the net figures are going to be today. Gross figures are rather going to be low itself. But even if you look at the retail as well as the HNI desk, the sense that I'm getting from them is the fact that though they are sitting on the sidelines, keeping their powder dry for opportune moments for investment, which may come after the budget itself. As of now, the technical Trader Talk is going on. They're saying 7250 to 7260 is where the resistance level of the Nifty is coming in. Once we go past these zones, we can see some further upticks coming in purely on account of short covering as well. And that's what we've seen in today's trading session as well. And they believe that the markets are likely to be range bound, at least as far as expiry is concerned, in a range between 7100 to 7350 itself. They'll keep an eye out on the proceedings of the budget session, which includes the rail budget as well as the economic survey as well. They will keep a close eye out on all these things, as well as how the opposition behaves, considering that may give an insight into how key reforms are likely to go forward as well. So the budget is the key trigger for the markets as of now, but an eye out will be kept on the global markets as well, considering that we are seeing a bit of a relief rally across the globe, which is aiding us as well. So any adverse movements there will be tracked as well, is what the dealers are saying.
Okay, Mangalam, thanks for that. So a lot of people perhaps keeping their powder dry ahead of the budget. Nobody wants to take any big bets, but traders are still trading. So let's tell you what you should be doing in these last dying moments of trade. Mayuresh and Ashwini Gujral are with us to tell us what to buy or sell today for a reverse trade tomorrow. Ashwini, let me begin with you. What do you have on your radar?
See, unfortunately, BF Utilities has met its target, so that's out of the picture. Britannia is a buy with a stop of 2760. Look for targets of 2820. And NTPC is a sell with a stop of 131. Probably look for a target of 120.
Okay, and Mayuresh Mirani also is with us. Mayuresh, what about you? What would you recommend?
It would be a buy on Marico with a target price of 255 and a stop loss at 233, and a buy on ICICI Bank with a stop loss of 193 and a target price of 210.
All right, Mayuresh, thanks a lot for those closing strategies. Ashwini, a word on Crompton Greaves as well. 6.5% higher right now. From this point on, is this a stock that you would want to carry forward?
See, Crompton Greaves basically is having a pullback rally towards, say, about 150, 151. That's about midway from where it fell from 200 right down to about 105 odd. So once we get to 150, this pullback rally should be over, and I think prominent grooves will come back again towards 100, 120 zone.
Okay, stay on guys, we'll come back to you. Markets are very slow, but there are still many stocks that are moving around, and Varinder is here to give us that list of stocks. Varinder.
Well, I'll start with some of the small cap gainers where we are seeing huge surge in volumes today. Look at Sagar Cements, that stock is buzzing nearly 70 times 10-day average. Forbes & Company, that stock up over 12%. Again, the volumes are nearly 55 times 10-day average. Look at Treehouse, nearly 21 times 10-day average done on this stock. Ramki Infra, Jindal Steel, Hisar, unusual volumes today, nearly 12 times 10-day average. And BF Utility, BF Innovation, you've been talking about nearly 15 times 10-day average. All these stocks buzzing on huge volumes today. Other small cap gainers like Andhra Petro up 20%, ITDC post CNBC TV 18 story, Fact which is buzzing on volumes today, Orient Abrasives, Compuge, Infocom, Dharamsi Morarji Chemicals, Mythanol Oils, Rushil Decor up 10%, Milk Food, Capital Trust, Jyoti Resins, Rolla Tenors buzzing after a long time, Sham Tele, Scanpoint Geomatics, Renaissance Jewelry, Indian Cards, RDB Limited, Mukund, Career Point, Nirvikra, Paper Mills, Thapar Group Company, Manugraph and Texo Pipes are all buzzing. Some of the losers today, Bini Limited, Signet Industries, Imami Paper Mills, Zycom are moving down.
All right, Varinder, thanks a lot for that. Well, just a bit of warning, some of the names that Varinder took were the same ones which were rallying in December thereabouts, and you know what happened after that. So a lot of these stocks, you've got to be a bit careful with the way some of these stocks have rallied of late. Varun Goyal of Motilal Oswal Asset Management is also with us. Varun, hi, good afternoon. It's not been good going for your portfolio in particular for last 2-3 months. The entire market has gone down, but some of your outperforming stocks are now beginning to fall a lot. A case in point being Maruti. How would you approach the stock from here on?
Good afternoon, Anush. I think as far as the four-wheeler segment is concerned, we remain quite optimistic about the volume growth scenario. I think if you look at the passenger car segment, the volume growth of some of the leading players has been in excess of 10% for the 10 months of this fiscal, and we believe that as economic growth revives, especially in the urban areas, we would see we could continue to see good volume growth numbers. Our own sense is that as the pay commission recommendations and the ORO kind of stimulus also comes into the economy, the next year could end up being better as far as the passenger car segment is concerned, and therefore we would continue to be constructive on that space.
Okay, would continue to be constructive on a space like autos. The other pocket that you are quite bullish on is the private sector banks. So HDFC Bank, Kotak Mahindra Bank, IndusInd are all part of your core portfolio in many of your funds. At any point, would you be, sort of tempted to get into the PSU banking space, or do you think that that place is fraught with a lot of risk right now?
I think public sector banks, we all know that RBI has induced special round of provisioning for most of these banks, and we are yet to see one more quarter of pain. We believe that quarter fours could end up being a little more worse than what we have seen in quarter three. So we would actually wait for that exercise to be over. We believe that once that provisioning activity is over, the PSU banks can start rebuilding their books. Obviously, from if you look at 1 year down the line on this kind of a low base, the corporate earnings then could look a lot more attractive. But I think for now we would tend to wait for clarity to emerge post quarter four numbers. I think as far as private sector banks are concerned, most of them have been cautious. Most of them have been focusing on the consumer side of the book, and they have completely avoided the wholesale segment or the industrial segment. And those segments we believe will continue to be a driver of lending activity at least for the next few quarters, and therefore we would tend to stick with the private sector banks for now.
Stock of the year so far, Varun, has been Sun Pharma. In fact, Sun and Ultratech are the only stocks. You can add Infosys as well, but Sun and Ultratech which have gained this year. Fresh look for Sun Pharma in your portfolio?
Well, I think we remain extremely constructive on the pharma space as a whole. As of now, pharma contributes around $15 billion of India's exports. We believe that this figure can go significantly higher in the next 5 to 10 years. There are a lot of companies which now have very, very strong marketing and front-end presence in US, and that remains a key driver of corporate earnings for Indian pharma companies. I think also last 1 year has been pretty slow in terms of US FDA approvals for a lot of Indian companies, and I think that things should get corrected this year. We're expecting Tier 1 companies should be able to launch a lot of new drugs. They have a very healthy ANDA pipeline, especially for Tier 1 names, and we remain very positive that Tier 1 companies will continue to deliver 20-25% kind of earnings growth. So that's a sector that we are very, very positive about.
Okay, Sudarshan, I wanted your thoughts on some of the telecom names, because give and take everything, telecom has actually been one of the best performers in the month of February. Bharti has gone up almost about 15% and Idea is up about 8% or so. I know these stocks have been under quite a bit of pressure in the last 6-8 months, but just for a pullback rally, would you play it some more?
Actually, yes, and you correctly identified a sector that has done a remarkable turnaround. From being very bearish, Bharti is now looking attractive as a buying opportunity. I wouldn't say the same for Idea, but Bharti is a buy. It's actually turned around and made a bullish pattern and is joining the Nifty in suggesting higher levels ahead. There is a swing trade in Bharti. You buy and wait at least till the budget morning.
Okay, Mayuresh, a word on Just Dial. I mean, we've seen some bit of recovery, but still one of the biggest losers this year.
Again, Anuj, I think what has happened with the stock has been very evident in terms of how the numbers have panned out, and clearly our own take is numbers will not improve operationally unless I think the new engine, which is Surge Plus, actually starts delivering. Having said that, probably I think the kind of management commentary around the new application, I think, though it's very, very encouraging, one really needs to look at numbers, and since I closely monitor numbers, you need to probably have numbers come on a consistent basis. So the stock has got beaten down from its historical high. The valuation probably have become lot more attractive at this point of time. But again, I think need a lot more clarity in terms of how the application is expected to pan out, the kind of operating cash flows that the management is looking for. So I think Q4 numbers will be keenly watched out for, and I'll probably look out for consistency in numbers. So at least at this point of time, my take is it's largely a trading move. The buyback announcement that has probably taken place is also causing some amount of excitement in the stock, if I may put it that way. But clearly, I think from a fundamental perspective, still I think these key parameters need to improve for Just Dial.
Okay, we have about 5 more minutes to go. I think a little over 5 minutes to go, and today has been such a quiet trading session. Anuj, you get the sense that there is this bit of a lull before what could perhaps be a storm. Very interesting. I mean, this budget, this is, I guess, the lowest expectations budget we have ever seen in the last many years. Not too many trades being taken, no pre-budget rally at all. What's happening?
Yeah, I mean, to be fair, from the lows, the market has seen a bit of a rally, but you're right to say that this really does not classify as the pre-budget rally. This is a global short covering move, and we are part of that. And my sense is, Sonia, that once budget is out, it will be 1 or 2 day affair, and after that, it will be a non-event, and you'll be back to tracking global cues. The only problem that I have with budget is that just because we haven't built in any expectations doesn't mean that the post-budget sell-off is out of the way. That is something that the market is still vulnerable to, because that could also coincide with the end of the global short covering bounce as well. And there could be a couple of disappointments in budget, so that could always play spoil spot. But just because the market hasn't had a pre-budget rally and is going into the budget with low expectations does not necessarily mean that market will have a post-budget rally, because this market is tracking global cues, and at this point in time, the global markets have not given you a sign that they are ready yet to have next round of up move. It looks like a global short covering bounce going on, which could get sold into at any point. So that's the worry right now.
Oh yes, and even in the budget, I guess this time it's a very very tough task that the government has, right? On one hand, meet the fiscal deficit, on the other hand, spur growth. So I guess it could be a lose-lose for the market at some juncture for sure. Mayuresh and Varun, I wanted your views on this. Varun, first to you, from the budget itself, if the government does not, or rather relaxes on their pre-committed target of 3.5% fiscal deficit, will that dent the credibility of the government, or will the street be happy that perhaps the government is looking to spur growth?
Well, I think at the end of the day, budget is just an accounting exercise, and most of the big bang reforms and all can happen throughout the year, and they don't really need to be part of the budget exercise. Having said that, of course, the big number to watch out is the fiscal deficit number. Our own sense is that the government might want to adhere to that, considering the fact that India has been treated quite well in the last 1 year because of the macroeconomic stability that we have, and one would want to believe that the government will want to keep it that way. We believe that if the government keeps the fiscal deficit at that level, we might end up seeing a rate cut pretty soon, and that's something which will help revive growth. So our own sense is that the budget deficit should be closer to the 3.6 number that what most people would expect.
Okay, Mayuresh, your thoughts on whether we can have a post-budget rally or a post-budget sell-off?
No, clearly, Anuj, I think the markets are expecting some amount of leeway happening on the fiscal deficit number, and that probably is something that a lot of participants are expecting. However, I think I'll agree with what Warren has to say. I think the credibility on the macroeconomic front that we probably achieved is more or less to stay on the fiscal consolidation path, and that is what will probably spur rate cuts, as he was rightly mentioning. So clearly, I think what the governor has also said is something on similar lines. So I think it's going to be a very fine balancing act by the finance minister in terms of how he's probably looking at the fiscal deficit targets that he's earmarked at the end of the last budget, and clearly how he's looking at growth as well. So what kind of leeways he gives in terms to spur rural consumption, in terms of what kind of a non-capital outlay he has. I think these are important aspects to be looked out for. So I think this budget is going to be extremely interesting to see how the finance minister basically balances these two acts. But clearly I think any event which probably goes contingent against what the market is expecting, probably you might see some amount of weakness. But I again agree to your point, Anuj, that I think it's going to be a couple of days, 3 days, the markets will then get over the budget and we'll be probably looking at the global scenario once again.
Okay, just about 3 minutes left for markets to close. We don't have too much to recap today actually, so let's squeeze in one more technical question to both our guests. Ashwini, so what would you advise a Nifty trader? Take home some profit, tomorrow could be a gap down, or the market does not have momentum, or respect the screen, it's still showing green ticks?
Well, the Dow futures are up right now 200 points. If that kind of global cues can't take us higher, unlikely that worse global cues will take us higher. So at least take profits on substantial long positions. I think it will be a 5-minute affair for 7200 to be taken. The time it's taken, Bank Nifty has hardly had a 30-point rally. Nifty is hardly up 20 points. And there's not a sign of a great momentum. So people should be very careful with long positions right now.
Okay, Sudarshan, would you share that warning?
I think we are long. There is nothing to suggest that the long positions are not working out. So there is a stop now which is visible, that's 71.45. Keep a stop at 71.45 and stay long.
Okay, so that's two different views, but then different views make the market. Let's talk about the day so far, and it's been a decent day. The market still end in green, and at no point did the market turn into the red. So that was the good part for the bulls. Of course, the fact that it did not break out was something that would worry a lot of bulls, considering that today we had decent global cues, as Ashwini also pointed out. Dow futures were also up 200 points. In terms of Nifty gainers, really 2 or 3 stocks stand out. One is Lever, which has seen a big move after a really long time, 3.5% higher on HUL. Reliance was up about 2%, and then you had Ultratech Cement, which was up 2.5%. Ultratech is up 5% for the year. Apart from that, as a sector, Pharma did well, led by Sun Pharma, 2.5% higher on that. Dr. Reddy's 2%, and Lupin was up about 1.4%. Couple of private sector banks rallied, the likes of Kotak Mahindra Bank and Axis Bank as well. Couple of telecom names as well. Bharti, of course, was the one where we saw some rally. On the way down, again, 2 stocks stand out really. One is ITC, which was down about close to 2%, and the other is Maruti Suzuki, that was down 1.5%. Then, of course, you had weakness in names like Tech Mahindra, NTPC, Adani Port, some profit booking in Adani Port, but otherwise it was really a low volume day. Cash market volumes just about 11,500 crores. Trading opportunities were there, of course, in the mid-cap side today.
Yes, it was a good day for the mid-cap index because the index itself goes home with about 0.6% gain. The market breadth is not great. It's about 2:1 in favor of the advances. We would have liked better. But then again, you can still say that there were more green stocks than red stocks today. Couple of pockets that did really well. One of them was fertilizers. So FACT goes home with a 20% gain. RCF goes home with a 10% gain. Something like an NFL was up in the green as well. So that was one pocket that looked good. The BF, the Bharat Forge group companies looked quite good today. BF Utilities, BF Investments, Bharat Forge itself. All these stocks were up anywhere between about 2 to 20% odd. Then you had a couple of other names, 52-week highs for names like Marico and Pidilite. Remember, both those companies delivered good numbers this quarter, so they've been moving from strength to strength. Both stocks up about 1 to 5 odd %. On the downside, you did have Motherson Sumi that came in for selling pressure. Canara Bank, Jet Airways, and a couple of others like Titagarh Wagons were down almost about 1 to 2 odd %. But we leave the markets just at that 7,200 level. Today was a nothing sort of a day for the market. Very range bound, low volumes, not too much activity for the frontliners. But yes, we did manage to protect that 7,200 level on the downside. Just to get a couple of more calls, Sudarshan, since you pointed out that you should maintain a strict stop loss and continue to be long. A couple of stocks where you would be long on from the frontliners tomorrow.
Well, one of them is Sun Pharma. We've talked about Dr. Reddy's today, and I think Sun Pharma is doing the right things. And the other one, surprisingly, should be ICICI Bank. Now, there is a context, Sonia, you understand it. If the markets open steady tomorrow, these two stocks are the ones I would be looking to buy.
Okay, so that's the stock to buy. Ashwini, today it was interesting. We had Axis outperforming Axis Bank.
Come again?
Today we had Axis Bank outperforming ICICI Bank. Normally both these stocks move in tandem. What is that telling you, the move today?
See, if the bank nifty is hardly up 40 points, I don't think day on day outperformance really matters. It was up just 1%. The main issue here is that the big banks, SBI, ICICI Bank, they need to make those breakout moves if the bank nifty has to really move up, because otherwise the smaller PSU banks have done their thing and most of them are now at their 20-day moving averages. So that way I think ICICI and SBI hold the key. The other banks kind of follow through based on them.
Okay. Mayuresh, what's the sense you're getting on how to approach the private banks ahead of the budget? I mean, I know there is a bank recapitalization for the PSUs, but PSUs are still the hated sector amongst the banking space. So if one had to buy a couple of private banks just to ride on the sentiment, which ones would top your list?
So clearly, I think it's a mix of what you're talking on the retail and the corporate side. So HDFC Bank and ICICI Bank would be right there at the top. Individually, I think both these banks have done reasonably well. Again, I think the asset quality issues which have come to the forefront will have some amount of bearing in terms of how ICICI's book pans out, at least for the quarter to come. But clearly beyond that, and if you're looking at the base of FY16 over 17, we're still expecting a decent earnings growth in excess of 20% for the banking industry as a whole. So I think HDFC Bank and ICICI Bank is something that I'll probably be liking from the top tier private sector banks.
Okay, Ashwini, two of your intraday calls, BEML and Concor, will you carry them till the budget, or were they just day trades for today, going by the momentum?
See, these are the stocks to be in. Otherwise, Nifty is all over the place. So just those budget sensitive defense stocks, railway stocks, all of those guys, they generally tend to have a good week before the budget. And that's where people should look for daily in terms of ideas. Even fertilizer, as you can see last couple of days, how it's moved. Otherwise, there's not a whole lot of momentum other than the FMCG sector.
Okay, gentlemen. Guys, go, because there's not much to chat about this boring market that we've seen today, except the fact that we've managed to hold on to some gains and 7,200 is still holding quite well. But coming up, will the upcoming budget accelerate the use of eco-friendly vehicles? We will take a check on the electric car segment after a short break.